Welcome back to the Investing Talk podcast. Today we're taking a closer look at the ProShares Bitcoin Strategy ETF, BITO, and its potential as a growth opportunity as we stand here in early 2025. We'll use 10 specific criteria to give you a well-rounded picture and ultimately help you decide if BTO is worth considering for your portfolio.
These criteria are really the gold standard when you're evaluating any exchange-traded fund. But I think it's fair to say they become even more more crucial, I should say, when we're talking about something as dynamic and ever-evolving as cryptocurrency.
Right, so let's start with the basics. How big is BTO, in terms of assets?
Well, as of March 5th, 2025, BTO has a market cap of $2.509 billion, at least according to stockinvest.us. And generally speaking, an ETF's market cap is pretty closely aligned with its assets under management, or AUM.
Okay, so over $2.5 billion. That's a considerable chunk of change.
Absolutely. It's not insignificant. That kind of market cap tells us there's serious investor interest, and not just from your average everyday investor either. We're talking big players, institutions, think BlackRock, the world's largest asset manager. Reports indicate they've got something like 3% of the entire Bitcoin supply, all tucked away in their Bitcoin ETF. That's a major signal, a shift. Institutional money's flowing into Bitcoin. It's almost like they're validating, legitimizing the whole crypto ecosystem, and that includes BITO.
Interesting. Very interesting. Okay, so size, check. Let's move on to returns. Our data shows a one-year total return of 10% for BITO, which on the surface seems to meet our criteria for growth. But then TradingView is reporting a performance of negative 9.14% as of February 28th, 2025. So how do we reconcile those two seemingly contradictory numbers?
Well, I think this discrepancy really underscores, highlights, I guess, the inherent volatility that we see in the cryptocurrency market. And this is especially true when you're dealing with a futures-based ETF like BITO. You see, BITO doesn't actually hold Bitcoin directly. It's tracking Bitcoin futures contracts. And those contracts, well, they can behave very differently than the actual price of Bitcoin, what we call the spot price.
So BITO's performance is tied to predicting where the price of Bitcoin is going, not just what it is right now.
Exactly. Now, think back to April 2024, the Bitcoin halving event. Events like that, they often trigger some pretty significant price volatility. It's entirely possible that BDO saw substantial gains earlier in the year, contributing to that 10% return figure, and then experienced a correction leading to the negative performance reported closer to the end of February 2025.
It's a good reminder that past performance, especially in crypto, it's not a crystal ball, right? No guarantees for the future.
Absolutely. And just to add another layer here, we should also note that B2's three-month total return was 5% as of February 28th, 2025. Now, that might suggest some positive short-term momentum. But when you look at the TradingView data, you see a six-month return of 10.63%, followed by a sharp drop in the last month, down 13.58% by March 2025. So it's a roller coaster. I think that's the best way to describe it, the ride that Bitcoin often takes investors on.
So these swings, they're definitely something potential investors need to be aware of, to factor in, right? Can we dig a little deeper into why BTs might be especially susceptible to these fluctuations?
Yeah, I think a big part of it is that reliance on futures contracts. They're influenced by things like, like contango, for example. It's basically a situation where the futures price is higher than the expected future spot price. You're paying a premium to lock in a price today for a delivery in the future.
So let me get this straight. Even if Bitcoin goes up in value, EDI2 investors might not fully benefit if that increase doesn't line up with the predictions, the assumptions baked into the futures market.
You got it. It's one of those inherent risks you take on with a futures-based product. Contango it can eat away at your returns, especially if it's a persistent issue. It's definitely something to consider very carefully if you're thinking about investing in BITO.
Okay. I'm starting to see how this all fits together. All right, let's move on to trading volume. What's BITO's liquidity looking like these days?
Well, it is. And that kind of, that explosive debut tells us a couple of things. First, there's clearly a high level of investor interest right out of the gate. And second, all that activity, it translates to high liquidity. With a high trading volume, it becomes a lot easier to buy or sell shares of the ETF without causing big swings in the price. That's especially important for active traders, the ones who rely on efficiency, quick execution, that sort of thing.
High volume, that's a definite plus for BITO, no question. But how's investor confidence looking, longer term? Are people sticking with BITO? Are we
Yeah.
seeing continued investment?
Absolutely, yeah. The data is pretty clear on this one. We're seeing positive net inflows into BITO over the past year. More money's coming in than going out. That's always a good sign.
Yeah, no, that makes sense. It's the vote of confidence.
To be precise, ETFDB.com reported BITO's one-year net flows were $294.44 million as of February 14th, 2025. That tells us investor confidence. It's not just, holding steady, it's actually growing. And I think a big part of that is probably tied to the increasing institutional acceptance of Bitcoin. These large players, they're putting their money where the mouth is, and it's having a ripple effect.
Even the big guys are seeing the potential, huh? Okay, so we've covered size, we've looked at returns, we've talked about trading volume and investor sentiment. Now let's talk about something that I think often gets overlooked, the expense ratio. Where does BITO fall on that?
Well, the data we have initially shows BITO's expense ratio at 0.50%, which isn't too far off our target. But I do need to clarify that. The actual expense ratio is 0.95%. You can find that on places like ProShares and website and other reputable financial sites like Kiplinger. And while 0.95%, it's actually pretty competitive, especially for an actively managed futures-based ETF. We have to remember that expense ratios, they can really impact returns over time. And in a volatile market like Bitcoin, well, that impact can be even more pronounced.
You're right, those fees, they do add up,
Yeah.
especially if you're holding on to BITO for a while, thinking long term.
Precisely. For comparison, some of those passive spot Bitcoin ETFs, they're operating with expense ratios as low as 0.20% to 0.30%. And while the difference might seem small at first glance, a fraction of a percent here and there, it can actually make a significant difference in your overall return, especially if you're a long-term investor.
So expense ratio, definitely something to factor into the equation.
Yeah.
All right, let's move on. NAV performance, what can you tell us about that?
Well, the data we have suggests BITO is showing positive NAV performance, meaning the underlying asset value is going up. But, and this is a big but, it's crucial to remember that BITO's NAV, it's not tied to the spot price of Bitcoin itself. It's linked to the performance of those Bitcoin futures contracts.
Ah, okay. So just because BITO's NAV is increasing, it doesn't necessarily mean the price of Bitcoin is rising at the same rate. Is that what you're saying?
That's exactly right. Futures prices, they can, and often do, diverge from the spot price. And there are a lot of factors that play into that, including, that concept of contango we talked about earlier.
Right. So this adds another layer of, well, I guess complexity, maybe a little bit of uncertainty for investors to wrap their heads around. It's not as simple as just, Bitcoin goes up, BITO goes up.
It highlights just how important it is to understand those nuances of futures contracts and how they can and probably will impact an ETF's performance.
Good point. Okay, let's shift gears for a moment and talk about volatility. Our data shows BITO's beta, that measure of volatility relative to the overall market, it's somewhere between zero point 0.8 and 1.5. What does that tell us?
Well, a beta of 0.8 to 1.5, it means that BITO is inherently more volatile than than the broader stock market. I mean, if you're using the S&P 500 as a benchmark, it has a beta of 1.0.
Not a huge surprise, though, right? I mean, we are talking about Bitcoin after all.
True, very true. Bitcoin is, it's known for its price swings, and that volatility, it naturally spills over into BITO. Now, BITO's structure, the fact that it's based on futures, it might moderate some of that volatility, at least compared to investing directly in spot Bitcoin, but, it's not going to eliminate it completely.
It seems like it's kind of a trade-off then, right? Higher potential returns, but also more risk.
You got it. BITO's probably going to be more appealing to, or maybe better suited for, investors who have a higher risk tolerance, those who are, comfortable with a bit more uncertainty. They're the ones who are probably going to be more attracted to that aggressive growth potential. But it's crucial that anyone considering BITO has a good grasp of both sides of the coin, the rewards and the risks, before they jump in.
Absolutely. It's a double-edged sword, that volatility.
Yeah.
All right, let's move on. Sector focus. What category does BITO fall under?
Well, BITO doesn't really fit neatly into those traditional sectors like technology or healthcare. It's generally classified under digital assets or cryptocurrency.
And as of right now, early 2025, are we still considering that a high-growth area?
Without a doubt. Bitcoin adoption, even with all the volatility, it's still moving at a pretty rapid pace. And you've got that increasing institutional interest, those big players we talked about. They're all in on the crypto sector. I mean, you look at BlackRock reportedly holding a $52 billion stake in Bitcoin. That's huge. It tells you something about the potential of this whole asset class. Of course, there are risks, no question about it. The crypto market is still relatively young, but the growth potential, it's definitely there.
So being aligned with the crypto sector, that's a point in BTO's favor.
Yeah.
All right. RSI, Relative Strength Index, let's talk about that. Our data shows BDO's RSI is falling between 50 and 70. Can you break that down for us?
Sure. An RSI range of 50 to 70, generally speaking, that suggests what we call healthy momentum. You're not in overbought territory yet. And for a growth-focused ETF, well, that's kind of the sweet spot. It indicates a good balance between buying and selling pressure. It suggests that upward movement, it's sustainable. It's not excessively speculative.
So as of February 28th, 2025, BITO's RSI looks to be, well, it's in a good place for growth, right?
Right.
But I imagine there are always some caveats.
You're right. There are always caveats. We've got to remember that Bitcoin's price cycles, they can have a big impact on BITO's RSI. In fact, some data from TradingView suggests that that BITO's daily RSI might have actually moved into that overbought territory sometime after February. It might be signaling a peak.
So we can't just look at BITO's RSI in isolation. We have to consider those broader market trends, what's happening with Bitcoin overall. It's all connected, right? It's just one piece of a much larger puzzle. We've covered a lot of ground here, this initial analysis of BITO.
We have, and we'll continue our exploration of BITO in the next part of this episode of the Investing Talk podcast. We'll delve deeper into its strengths and weaknesses and really look at how it might fit into different investor profiles. We'll also compare it to some other investment opportunities in the Bitcoin space, give you the information you need to make informed decisions.
Stay tuned. We'll be right back.
Welcome back to the Investing Talk podcast. We're digging deeper into the ProShares Bitcoin Strategy ETF, BITO, and its potential in 2025.
We spent the first part, kind of painting a picture of BI, highlighting its size, that impressive trading volume, that investor confidence we see. But like with any investment, we gotta address the potential downsides, the risks.
Right, of course. And I think one of the key risks here, it really stems from BI's structure. The fact that it's not based on the spot price of Bitcoin itself, it's based on Bitcoin futures. That adds a layer of, I don't know, complexity maybe that some investors might find a little tricky to navigate.
We talked about contango earlier. Could you unpack that a little bit more? Explain how that might affect BIGO investors.
Sure. Contango, it basically happens when the futures price of something, in this case Bitcoin, is higher than the expected future spot price. It's kind of like, you're paying a little extra, a premium for the convenience of locking in a price today for something you're going to get later, a future delivery.
So even if Bitcoin's price goes up, BITO investors, they could actually lose money if that increase doesn't match what the futures market was predicting.
It's definitely possible. Contango can eat away at your returns, especially if it sticks around for a long time. And that's a risk you take with any futures-based investment, including BITO.
Okay, so contango, it's something to be aware of, to keep in mind, definitely. What other risks should investors be thinking about when it comes to BITO?
Well, we talked about the expense ratio already. At 0.95%, it is higher than some of those passive spot-based Bitcoin ETFs out there. And over time, that difference, those fees, they can really make a dent in your net returns, especially if you're thinking long term.
And of course, we can't forget about the volatility of Bitcoin itself. Even if BITO's structure, the futures, even if that smooths things out a bit, it's still going to be subject to some pretty big price swings, right?
Oh, absolutely. I mean, Bitcoin, it's famous or infamous, depending on how you look at it, for those boom and bust cycles. And those cycles, they can be great for traders, those who know how to play them. But for investors who aren't prepared for those dramatic moves, it can be a little unsettling.
So, it's not for the faint of heart, that's for sure. It seems like you got to have a pretty high risk tolerance to play in this space, and really understand what you're getting into, both the upside and the downside.
I think that's a fair assessment. But even with the risks, BILO, it's got some pretty clear advantages too. That high AUM we talked about, that robust trading volume. Those are signs of strong investor confidence and good liquidity. It means it's pretty easy to buy and sell shares without causing huge price disruptions.
And the exposure to Bitcoin, we can't ignore that. Even with the volatility, Bitcoin's Well, it's still a high-growth asset class. It's attracting investors who are, I don't know, maybe they're looking to diversify their portfolios to go beyond the traditional stocks and bonds.
That's a good point. A lot of people are looking for alternatives for something that has the potential to really grow. So who's BOO right for then?
Well, I think it could be a good fit for investors who, who aren't afraid of a little risk, those who are optimistic about Bitcoin's future. They believe in the long-term prospects, and of course, those who are looking for a convenient way to get a piece of the action to tap into this whole burgeoning asset class. Makes sense. But what about the investors who are, I don't know, maybe they're interested in Bitcoin, but they're a little hesitant about the volatility, the ups and downs that come with a futures-based ETF like BITO. Are there other options for them?
Oh, definitely. There are always other options. For those investors, a passive spot-based Bitcoin ETF, that might be a better fit. Those ETFs, they usually have lower expense ratios, and they track the spot price of Bitcoin more directly. So potentially a little less volatility, a little smoother ride.
So there's something for everyone then, right? It's all about finding the right fit, the right tool for the job, so to speak. All right, so we've talked about the risks, the rewards, the things to consider when it comes to BITO. What are the key takeaways here for our listeners?
I think the biggest takeaway is this. BDO, it's not a one-size-fits-all investment. It's a complex product, and it requires some careful thought, some research before you jump in.
Investors, they need to understand how those futures contracts work. They got to be comfortable with the volatility, the fact that, the crypto market, it can be a wild ride.
Yep.
And they got to factor in that expense ratio when they're thinking about potential returns.
Exactly. And past performance, well, it's not a guarantee of future results, right? Bitcoin, it's seen some incredible price surges in recent years, but there's no way to know for sure if those trends are going to continue.
So a realistic outlook, that's important, right? And a long-term perspective, that's key when you're considering any investment in Bitcoin, whether it's, through BITO or through some other avenue. Any final thoughts for our listeners as they navigate this world of BITO and other Bitcoin investment options?
A couple more things, I think. First, stay informed. The regulatory landscape around Bitcoin and crypto in general, it's constantly changing, and those regulations, they can have a big impact on the market, which of course will affect BIO.
Regulations, they can either help or hurt, right?
Yeah.
It all depends on which way the wind blows.
That's right. And second, diversification. I can't stress this enough. Don't put all your eggs in one basket. Even if you're super bullish on Bitcoin, make sure your portfolio is balanced, that it aligns with your goals, your risk tolerance, all of that.
Excellent advice.
Yeah.
We've really covered a lot in this segment. We've explored the risks, the rewards, things to think about when it comes to BOYO.
We have. And in the final segment of the Investing Talk podcast, we'll wrap up our discussion of BOYO. We'll compare it to some other Bitcoin investment options out there, and we'll offer some final thoughts to help you make those all-important investment decisions.
We'll also tackle the question that's probably on a lot of people's minds. What does the future hold for Bitcoin and for ETFs like BITO in this increasingly complex financial world we live in? Stick with us. Welcome back to the Investing Talk podcast. This is the final part of our deep dive into BITO, the ProShares Bitcoin Strategy ETF.
Over the past two segments, we've really broken down BITO. We've analyzed its potential, weighed the pros and cons, and thought about, who it might be a good fit for different investor profiles.
We've covered a lot, but there's one big question that's still kind of hanging out there. What does the future hold for BITO and for Bitcoin itself, for that matter?
Yeah, predicting the future is always a bit of a gamble, but we can look at what's happening now. Those trends that might give us some clues about what's coming down the road, both for Bitcoin and Bitcoin ETFs.
So what kind of trends should investors be keeping an eye on?
Regulation. It's a big one. The crypto space, it's still relatively new, right? And governments, well, they're still trying to figure out how to deal with it, how to regulate it.
We've seen a lot of changes already, a lot of uncertainty, that's for sure.
Exactly. And those regulations, they can have a big impact. Clearer regulations that could boost investor confidence, make people feel more comfortable. But on the other hand, if regulations are too strict or unclear, well, that could create barriers, make it harder for wider adoption.
So regulations, they're kind of a double-edged sword in a way,
Uh,
right? They could be a good thing, or they could hold things back. It all depends on how they play out.
that's a great way to put it. Another trend to watch is institutional adoption. We talked about this earlier. Those big players like BlackRock, they're already heavily invested in Bitcoin.
And it seems like more and more institutions are jumping on board.
It's gaining momentum, and that increased institutional involvement, well, it could lead to some pretty significant changes. We might see more sophisticated investment products, more liquidity, potentially even less volatility. All of that could make Bitcoin and BITO, by association, more attractive to a wider range of investors.
It's almost like those big institutions, they're giving Bitcoin a stamp of approval.
Yeah, I think that's a good way to think about it. We also can't forget about the technology itself, the crypto space. It's constantly evolving. There are always new developments, new innovations.
It's moving fast.
Mhm.
Trying to keep up can be a challenge.
It can, but it's important, especially if you're considering investing in this space, that those innovations, things like improvements in blockchain scalability, security, those things are going to have a major impact on Bitcoin's long-term viability.
So staying informed, it's crucial for anyone who's thinking about BITO or any other Bitcoin-related investments.
Mhm. Absolutely. Now, if we focus specifically on DTO, its future is really, uh, well, it's really tied to the fate of Bitcoin itself.
Yeah, I think we've kind of established that it's almost like a in symbiotic relationship, right? If Bitcoin does well, BITO is probably going to do well. But if Bitcoin struggles, well, BITO is probably going to struggle too.
Exactly. And that's why it's so important for potential investors to really do their homework, understand how Bitcoin works, the ins and outs, and understand the ETF structure itself, how that all plays into things.
They gotta know what they're getting into, right? Be comfortable with the risks, have a clear plan, a strategy, and be prepared for some bumps along the way. Because with Bitcoin, there's always going to be some ups and downs.
That's part of the game. Before we wrap up, let's touch on some alternatives to BITO for those investors who want exposure to Bitcoin, but maybe BITO isn't quite the right fit.
We talked about those passive spot-based Bitcoin ETFs earlier.
Right. And those can be a good choice for investors who are looking for a more direct approach, lower expense ratios, and they tend to follow Bitcoin's spot price more closely.
What about just investing in Bitcoin directly?
That's always an option,
Yeah.
but it comes with its own set of challenges.
Yeah, things like security, making sure your Bitcoin's safe. You need a crypto wallet, and those exchanges, they can be a little tricky to navigate, especially if you're new to the whole crypto thing.
Right, exactly. So for some investors, BITO or other Bitcoin ETFs, they might be a more accessible entry point.
So no matter how you decide to invest in Bitcoin, whether it's through BITO or some other way, those principles we've talked about, they still apply.
Definitely.
Diversify. Don't put all your eggs in one basket. Stay informed, do your research, be aware of the risks, and maybe most importantly, don't invest more than you can afford to lose.
Those are words to live by, no matter what you're investing in. It's been a pleasure talking about BITO and Bitcoin with you today.
Thanks for sharing your expertise. And to our listeners, thank you for joining us on the Investing Talk podcast. We hope you found this deep dive into BITO informative and helpful as you make your investment decisions. If you enjoyed the episode, please consider subscribing, liking, and leaving a comment. We appreciate your support. Until next time, happy investing.